Going. We've got Mr. Motilal Oswal joining in to talk about earnings in the quarter gone by at Motilal Oswal Financial Services. Thanks, Mr. Oswal, for joining us this morning. Good to have you on the show. So, just looking back at the quarter gone by, it seems to be a fairly challenging one, whether you look at sales or profits or margins, or the way different business segments have done for you, Mr. Oswal. How would you sum it up?
I think this fourth quarter was the lowest one in terms of the revenues as well as profits, and that is, I would say, primarily due to three reasons. One is, of course, the market conditions were very challenging for us. You've seen the cash markets volume were absolutely all-time low at about 10%, and even within that, delivery was hardly, I think, overall, if you look at the delivery to the market turnover, is about 3%, which is, I would say, absolutely lowest numbers. The options volumes are at about now 65%, which doesn't give any kind of revenue for the brokerage firms overall as well as for us. So my sense is that the market conditions were very challenging in the last quarter, and that's where I think somewhere we have been impacted. That was, I would say, number one reason. Number two reason is some of the kind of, I think, sizable deals on investment banking were at the advanced stage of kind of completion. So I think it will come in next year. And the third reason is that we have invested quite a lot into three businesses led by AMC, then private equity and wealth management. Those businesses, although I think requires a lot of capital, and we have invested a lot in last couple of years, but results are yet to be seen maybe in next couple of years. So because of all these three things, this quarter was challenging. That's what I would like to say. But I also would like to mention that if you look at year on year, the performance may not be, I think, looking so kind of, I think, adverse. The overall, the revenues are down by only about, say, 7%, and the profit is down by only about 18-19%. So I would say it was definitely a year of challenges, but looking at the market conditions, I think we have done quite well from that perspective.
Mr. Oswal, good morning. So looking at the challenging period that you have emerged from, are you expecting things to look up going into FY12?
I think FY10 was very good for us. 11 was more or less, you can say, slight down by 18%. I would look towards the next year as a slightly optimistic note, because the corporate earnings momentum we see is not still kind of impacted. We see, I think, this year earning will be about 26-27% growth, and next couple of years we see earning growth of anywhere between 18 to 19%. I think few businesses which may contribute for us in next couple of years would be, I think, investment banking, AMC, and private equity. So I would be optimistic for current year compared to the last year.
Mr. Oswal, I was just looking at the breakup. By the way, as we speak to Mr. Oswal, the market's completely lost whatever little gain or momentum it had on top. Right now, again at 57.50 on the Nifty. So, as I was looking at the segmental revenues, it seems to be very clear, as you're saying, that some of these side businesses have to contribute more to make up for the fall in broking revenues. On broking, do you think it's the absence of retail enthusiasm that's actually making, you know, the challenge so forthright? What will happen to retail sentiment? I mean, if you could just sum that up, because that's very crucial to how your broking revenues do. And on the AMC side, the wealth management side, what kind of break-even targets that do you have? I mean, next quarter after that, what kind of time targets have you set for yourself?
Sure. I think if you look at retail broking, you've seen the participation was very low, and not only retail broking but even institutional broking. I think we have looked at the delivery numbers, and that's where retail and institutional activities really can be measured into. And so in terms of delivery volumes, we are far lower than even last year, maybe down by 20 to 25%. In terms of absolute deliveries volumes for both institutional FII as well as for the retail side. So in that set, I can see that overall the retail was very kind of inactive. Maybe the sentiment was down, and maybe I think we have seen some kind of headwinds from oil and inflationary kind of shocks. I think we have seen the worst, although the numbers are not kind of visible in last kind of quarter, but we have seen some kind of money flowing to AMC's mutual funds. We have ourselves launched 3 mutual fund schemes where we could, I think, collect about 400 crores plus money. So my sense is the retail somewhere is getting institutionalized, where the money is coming through PMS as well as through mutual fund. Even last year we have added about 300 crores worth of sales to our PMS, which is under our AMC business. So my sense is that retail last year the market conditions were not so great for the retail to I think come back directly, but they are coming through more through the AMC, the PMS and insurance routes.
Yes, sir. Go ahead.
AMC and wealth management you were talking about, yeah. So this was our first year of AMC on the mutual fund side, and you've seen kind of numbers I have talked about. So I think even the adverse market conditions, we have been able to create well differentiated products, all three products, I think, and that has generated kind of about 400 crores plus money on equity side. Wealth is really under again really in build up force, and I think wealth is more or less will be at break even this year. AMC we may have to invest for a couple of years more. Private equity investments we are investing, but that is also above break even. But we are not seeing any kind of earnings, especially from profitability perspective, from all three businesses, because all three businesses require some kind of investing time, and maybe in next couple of years we can see huge amount of impact on our top line as well as bottom line.